Now presenting John and Craig from AtlasClear.
Good morning. Everyone hear me fine? Excellent. Typically, John will tell you that I don't need a microphone, so I want to make sure this comes across properly. My name's Craig Ridenauer. It's an honor to be here today. I am the Chief Business Development Officer of AtlasClear Holdings. In a moment, I'll introduce my 30-year partner, John Shibley, who's the Chief Strategy Officer at AtlasClear Holdings. We are excited to be here. Most people look at AtlasClear Holdings and wonder, what do you do? And what we do is something that people don't think of on a regular basis. What we specialize in is the plumbing of markets, of the clearing and settlement of financial assets, of providing services to the broker-dealers, of which everyone touches everyone's life, but they don't really think about the mechanics necessarily of how does something get custody, cleared, and settled. We have a tremendous opportunity in front of us. We're thrilled to be here today to present it. And I'm going to get the ugly word out of the way now. We did go through the SPAC process, so that's kind of a badge of honor and also a painful process, one that most don't make it through these days. One we're fortunate to feel like we got through by the skin of our teeth, but we got it done nonetheless. But we differ from the SPAC cholesterol that's out there, right? People hear SPAC, they hear public offering, and they go, oh, here we go. We differ in the fact that our SPAC was acquiring a 56-year-old firm that's profitable with a unique licensing set. Our SPAC has a contract in place to acquire a Fed member bank to internalize into the ecosystem, to layer in world-class technology that's a part of this to create one-stop solution for our clients, what ultimately will be corresponding or introducing broker-dealers that you deal with on a daily basis. So I just wanted to get that out of the way. We did come through the SPAC process. We're publicly traded. We think there's incredible value in our company right now in the stock price, partly because of that SPAC cholesterol. And that's just the way it is, and we're fine with that. We don't measure today, we don't measure tomorrow, we measure where we're going to be in 3 months, 6 months, 12 months, 2 years, 3 years, beyond. So that's the reason, hopefully, you're listening today. You're looking for opportunities and ideas, and hopefully we pique your interest because we really feel like we have an unbelievable opportunity in front of us. Any attorneys in here? Okay, there's the disclaimer. Certainly available in the presentation that we'll have post this.
I'll give you comments on it when you're done.
Please do. My wife is actually an attorney, so it'd be great to be grilled twice. So it's important to understand what we just went through. We actually closed the transaction February 9th. We actually began trading publicly on the American Stock Exchange, or NYSE American, on February 12th. And it's important to understand the pieces of what we acquired initially and what is coming. So over here on the left-hand side, it'll say we acquired Wilson Davis & Company, WDCO. Okay? That is a correspondent clearing firm. It has the same licensing set that Pershing has, that Fidelity has. It's a smaller clearing firm, but it has a unique licensing set. If you were to go on the site at NSCC DTC and really look up correspondent clearing firms and the licensings out there, it's a very limited field. What even makes this more unique is it's a 56-year-old firm, it's clean, it's profitable, and at the same time, their licensing is unencumbered, meaning it can custody, clear, and settle any asset. What does that mean go forward? It means as we get more clarity from the SEC, is hopefully they take a leadership role and begin to provide guidance on DLT, or people see it as crypto, but DLT is the backing of crypto. We'll be in a position to properly manage and custody those assets for our clients as we go forward. It's a very unique licensing set. We're excited to have them. The next acquisition we'll have now is called Commercial Bancorp out of Wyoming. It is a Fed member bank, 100 years in existence, actually longer than that. Small, tiny little bank, but with a clean, profitable history, and a unique set, meaning they have a Fed account where we can custody, clear, and settle assets at Wilson Davis. We can do deposit sweeps over to Commercial Bancorp over time, provided we get Fed approval. But it creates its entire internal ecosystem with deposit sweeps, extension of credit back through Wilson Davis, back out to the broker dealers that they deal with. So again, first step was we got Wilson Davis. We now own them, profitable. Second step is we're now going to enter into the Fed approval process on Commercial Bancorp. And then the third step is the prime brokerage technology. part of the transaction was we acquired a technology stack from Atlas FinTech Holdings that's been developed over a number of years. And that technology stack is to settle, custody, clear, and settle multiple asset classes. FX, fixed income, a number of different things. Okay, it is what we believe to be a world-class technology set. It is internal to the system now. We also have acquired code from Pack Square, which is for the broker-dealer side of the business. Again, cloud-based, forward-thinking, DLT-ready, all the things that we're looking for. And what this all creates is one internal ecosystem to custody, clear, and settle financial assets and provide services to a segment of the market, and this is the most important thing, and some of you probably have experienced this, the small broker-dealer space, the small hedge fund space, the small family office space. You can go down the list. The key is small, small, small. The big ones, they don't want to deal with them anymore. So it creates an opportunity. With our licensing set, with our ownership of these assets, and with these profitable companies, we can go in and we can service a portion of the market that has been absolutely orphaned. We're very excited about the future. So the state of financial services market, you can see it here. It basically is talking about all the different things that are impacting the financial services market and the small broker-dealers in particular. And you can read through the bullets, but ultimately what it means is that they've been orphaned in order to manage assets for the clients, do the things necessary for the clients to actually just manage their portfolios. They may have to go through multiple intermediaries just to clear and settle their transactions. They can't go to Pershing because Pershing's minimums are too high, right? They can't go to Fidelity because their minimums are too high. So what does that do? It cuts into their margins. It cuts into their costs. It actually increases their costs, but it actually, ultimately decreases their margins. So when you look at the full array that's out there, they have very limited access to very limited opportunities. And so what we're saying with our solution at AtlasClear Holdings, we can come in and we can fill that segment of the market for them, and they have a one-stop solution, which creates a much better environment for them. Better margins, better liquidity, a number of things that you can add on to that. Open field for growth. Okay, our target clients for prime brokerage, you can see it there. We've got hedge funds, we can go across the spectrum of everything, but at the end of the day, when you look on the right-hand side, it says correspondent clearing firms in 2024. Pershing, Fidelity, Apex, et cetera, focus their clearing service for larger institutions. Everyone knows those names, right? Small and medium-sized firms have limited options, and this just goes back to the opportunity we have right now, okay? Challenges faced by the small and medium firms. Again, minimums are larger. Need for piggybacking. Everyone understand what piggybacking is? That means if I was a broker-dealer called Ridenour and Associates, I would have to go to a larger firm just to get access to their clearing relationship that they have with Pershing. That's piggybacking. And that's how most of these small firms have to get their solutions. What we're creating is a one-stop shop ecosystem that, by the way, is already operating, right? And profitable. This slide, again, you'll have a deck, you can look at it. Everyone knows those names up there, and then of course you've got AtlasClear, which you're gonna know now. Okay, all this is saying with the check marks and the X's, it's saying for our target market, which is the small broker-dealer space, the small RIA space, the small hedge fund space, okay? When you look across the board, say on Pershing, BNY Mellon, okay, they don't necessarily provide these services to our target market. That's what the X's represent. The checks represent, they do. When you go across the bottom, because of the market that we're going after, we fill all of those needs. So what we're looking at right now is we've got a marketplace that has been orphaned, that has very limited options. And we're coming in with a profitable institution with a licensing set that is utterly unique, almost like a unicorn, very difficult to achieve and get. We're optimistic we will ultimately get Fed approval on this bank, and then we create the ability to custody, clear, and settle any financial asset, and also provide the banking and leverage from a Fed member bank out to our clients. And it's a unique product set and licensing set and opportunity in front of us that we think is certainly not reflected in the stock price. Again, go back to the SPAC cholesterol. I'm not going to mention SPAC again. We are not a typical SPAC. Profitable company, we acquired licensing set that's utterly unique and world-class technology, and we think the future is very, very bright. And so We don't measure things today, tomorrow. We measure it in weeks, months, years, and the opportunity in the market in front of us. So with that in mind, I'm going to hand it off to John Shibley, who's our Chief Strategy Officer, 30-year business partner. He may not want to lay claim to that, but we have known each other for 30 years. He also doesn't, he's a very humble individual, and he doesn't like to talk about himself. But when you look at the next slide, which is going to be the board of directors, because when people come in and they invest, you invest in an opportunity, but you invest in the people behind it. And this gentleman is one of the drivers behind that. And I'm going to ask him to share a story about how he got down this path of market structure, which is a very limited field. There are very few that specialize in that. So I'm going to force him to actually talk about it a little bit here. I want to thank you all for your time today. I'm going to hand it off to John real quick.
Thank you, Craig. Good morning. Can you guys hear me okay? Yes. Before I share the anecdote that Craig referenced, I do want to thank Craig for a variety of things. For being a friend, for being the best business partner imaginable, but also this weekend, this gentleman swam the intercoastal in Tampa Bay, a mile-plus swim in the most shark-infested waters imaginable to raise money for Stop Soldier Suicide. He raised $10,000 in one day for that cause. And so I just want you to know that charity community is part of us, and Craig is a great example of that. And so Craig referenced and asked me to share the anecdote as to how all of this got started. And I've actually never shared it publicly before, so I'm not sure how this is going to go over, but I'll do my best. G-version, okay. Coming out of college, I went to work for a brokerage firm called Oldie Discount Stockbrokers. I was interested in going to law school. I had enrolled in a couple of very expensive schools and had no way of paying for it. And Oldie promised me that if I went to work for them, they would help me pay for my law school. That wasn't entirely true. Ended up working for the firm, and then they promised me that if I moved from Denver, which I love, down to Clearwater, Florida, I had an opportunity to work with the founder, who was 64 or 65 years old. He was one of the first discount brokerage firms. Was very successful. Oldie at the time was the third largest discount brokerage firm in the country. But Ernie Oldie, the founder, apparently was concerned that he was losing touch as to how to modernize. And so he made this plan to bring down 5 young men to work with him and propose a solution how Oldie could move forward. So I moved down to Clearwater, Florida, worked there for 6 months, and I was astonished as how the firm worked. Right? They were a big market maker. They had research. They would research stocks that were generally under $10 a share. They were generally trading like $4 by $4.75, and they would issue research on these companies in which they were making markets. And I was a big tech person even when I was young, and I was like, hey, you know, the internet is a thing. This Pentium chip, I don't know, some of you look like you might remember the Pentium chip. The Pentium chip is a thing. Once the information gets down to the retail holder, once they understand that all we're doing is not trading, it's information arbitrage, these spreads are going to compress. And so I spent 6 months building a presentation to the executive staff of one of the largest market-making firms as to how electronic trading was going to take over and how they should consider not making markets, not stepping in front of their clients, but being partnered with their clients, giving them agency, giving them democratization, and just charging them a small fee. I gave a presentation in a room that was larger than this with all of the executive staff, and Ernie Oldie was at the end. He was a crazy man. He looked like Nick Nolte. He smoked cigarettes or maybe more at work, but a self-made billionaire. And so he was sitting at the end. I finished my pitch that I was sure that I had killed. The room went totally silent. He smoked his cigarette. And after I got done telling him that his business model was archaic and should be replaced by electronics, he said, I'd rather buy tickets to watch rats fornicate than listen to you. You should be fornicating potatoes. You should be a fornicating potato trader. Get out of here. That was the beginning of Next Trade. That was the beginning of my journey towards fintech and improving market structure through the application of technology and financial services. Very interesting story. So one of the things I'm very proud of is the board of directors for this company. Right? I have been in this space for 30 years. I've been on the cutting edge for 30 years, and I've done my best to build relationships, and it's reflective of the board that we have built. When we built the board for the SPAC, which happened in 2021, we built the board with a forward thought process, purpose-built for clearing, settlement, and trading. Bob McVeigh is our chairman and CEO. I've known Bob now for about 5 years. It's one of my younger relationships. Bob was the former CEO of Penson UK, former CEO of Penson Canada, former Chief Operating Officer of Southwest Securities. Bob is probably, if not definitely, the best operator I've ever known for correspondent clearing services. We're very lucky to have Bob. Bob is our chairman and CEO going forward. I'm next. I'm a director. I built NextTrade. I sold it to Citigroup. I built Matchbook FX, which is one of the first FX ECNs. I sold that. I built and sold a couple of banks. I've always been on the forward of fintech technology and solutions. Craig Ridenauer has been my business partner for 30 years. Craig has been in fintech for 25 years, about 20 years. Craig has been part of our companies for a long time. Steve Carlson is on our board. Steve is the former CEO and president of FC Intel Stone, which is now known as StoneX, former head of emerging markets. Our business plan is not just to tap the United States, but also to go out into the global market. Steve Carlson will be very helpful with that. Tommy Hammond is on our board. Tom is the former president of AtlasClear, which, if you guys know, is part of the New York Stock Exchange. Previous to that, he was the president of the Board of Trade Clearing Corporation. Tom is in the Hall of Fame for the Futures Industry Association. I would argue that Tom is the foremost expert in clearing and settlement. Very lucky to have Tom. Tom has been my friend and mentor for almost 25 years. Sandip Patel. Sandip Patel has been in fintech for almost 20 years. His big hit was founding a company called WellCare, which was the healthcare company that he sold to the Soros Fund. And then finally, Jim Tabacchi. Jim is the CEO of South Street Securities. He's also currently on the board of DTC. We are very fortunate with this board of directors in that we've got individuals that by themselves could run this company and run it successfully. But collectively, we bring 150 billion years. I don't know what the number is. We bring so much experience in clearing, settlement, and risk management. And when you're talking about clearing and settlement, the number one concern is risk management. We know how to apply technology to new products. We know how to apply technologies to clearing and settlement. So our technology suite is expansive. We have technologies for FX called Rubicon. This product has been in production for over 10 years. It's one of the most advanced, low latency, intelligent matching systems for FX on the street. Atlas FX is a forward white label product that we can deliver to our customers to give our customers, and from our perspective, our customers are not the individuals. Our customers are the financial intermediaries that then in turn have the individuals. We give them white label solutions so that these customers that by themselves don't have the resources or bandwidth or money to be competitive with the larger firms, we give them that footprint. Atlas FX is that for FX and more. Surface Exchange was a technology that was developed at over $20 million in investment. It's one of the most powerful FX option engines on the street, a full exchange platform. Then we have Bond Quantum. Bond Quantum is a real-time bond analytics system that allows brokerage firms to analyze the creditworthiness of a bond in real time. It gives them the opportunity to understand in real time how much credit to extend against it, or alternatively, to understand better the relative value of the product. PackSquare, we have another slide on. PackSquare is a full correspondent clearing platform that will allow us to reduce our expenses on technology and be more competitive to our customers. And Atlas in general is a fintech company. PackSquare. PackSquare, so as a correspondent clearing firm, our largest cost is people. Our second largest cost is technology. PackSquare will allow us to be more competitive on the technology that we offer to our customers. It's a full back office clearing solution. It's a full risk management solution. Everything you need to run a correspondent clearing firm, we now control and own. We are also a full crypto trading platform. And I'm always very reticent to talk about crypto without very clearly specifying that we will not touch a product of any kind, of any make, until it's clear from a regulatory perspective. But if you understand crypto, and I don't like that word, then you probably understand what it really means, which is distributed ledger technology. We are able to, through DLT, change the way clearing works. Clearing can break. Today we're at T+2, shortly we're at T+1, but you can easily do as a brokerage firm a $200 million trade with, for example, Raymond James and Stifel Nicolaus and Swedbank that fails between T and 2. And as a small brokerage firm, if you have a $200 million trade, even if it's acknowledged as a good fail, the next day, it can literally break your firm. And then as a corresponding clearing firm, you've got to have the capital to support that overnight risk at NSCC DTC. DLT will change all of that. You will have instantaneous settlement. So from a clearing perspective, your capital risk is eliminated. From a regulatory perspective, eventually, your AML, your KYC, all of it will be drilled down to the chain and perfect through execution. So we say crypto trading in the presentation, but when I see that, I just want a caveat. We're not going to trade in registered securities, but from a regulatory and operational perspective, we believe wholeheartedly in DLT. It is the future for clearing and settlement. Our numbers aren't done yet, and so I asked the lawyers if there was much I could say about our 10Q, our 10K, which I hope gets published in the next day or so. But prior to that, I want you to understand that our stock is massively undervalued. The best measurement that I could point out is our assets under management. Wilson Davis, as Craig mentioned, is a profitable firm. It's almost a 60-year-old firm. It's growing. We have today almost $1 billion under management. If you look at our direct competition in the market today, we've got StoneX, Interactive Brokers, and Hilltop Holdings, correspondent clearing firms, some of which also own a bank. Based on their assets under management to price ratio, our market cap, when I did this slide, was $16 million. That is ridiculous. That is roughly 1.3 times our actual net capital. That is less than the technology value that we have on our balance sheet. We are profitable and we are growing. If we were measured on our assets under management compared to those out in the street, StoneX, our stock price today, instead of $16 million, would be $300 million. IBKR, $128 million. I just want to stress that there's a lot behind the story here at AtlasClear. We have over $20 million in technology investment. I would argue we have the best board of directors and management team that you can find, and we are growing. The fact that our stock looks like a heart attack on an EKG post-DSPAC is not reflective of the quality of the company or the earnings that we will show going forward. So with that, I guess I will turn it over to any questions. Sir.
Yeah, is there anything that you would need to be able to target larger correspondents rather than just the small to intermediate? I mean, it sounds like you have some impressive components.
Thank you, sir.
Is there anything you're missing to be able to go after bigger?
I just want to point out, I don't know this gentleman, and I did not pay him, but for the great question, it's capital, right? That, for us, is the question in terms of how we can grow. We have introducing broker-dealers that want to join us today, but we're limited to capital. Our last net capital report, we were just close to $11 million in net capital. Our excess net has to be $10 million. Every introducing broker that we onboard has a different mix of business and might require us to have this much more net capital, that much more at NSCC DTC. And so for us, it's strictly limited by the amount of capital we have to onboard our clients.
Which of your capabilities are the most competitive versus what's already out providing services in clearing?
Another great question. I think a part of that is our willingness to be down in the microcap. Oh, I got a stop sign. To be down in the microcap space, which a lot of firms aren't willing to do. we are also, it's a disaster, but we're also willing to price competitively for the services. It's difficult for us to say that we do clearing better than Pershing or Bank of New York. We don't do clearing better, right? We do it the same, cheaper and faster.
Yep. And if you look at it, last thing we'll say is, if you go into the SEC.gov and look us up, last year when our S4 was made effective, we have 5-year projections in there that we did a tremendous amount of work on. We do think are conservative. And the total paid-in capital static over 5 years is $28.6 million. Now, we want a considerable amount more, and we're having conversations right now with investors who want to participate that are synergistic. But we're not looking like we don't need 100 out of the gate, but we do want to increase the capital base. As John mentioned, we have a number of correspondent clearing clients that would like to join us. So, thank you.
Thank you, guys. Thank you. Thank you, sir. I don't have cards. I'm John.